change your perspective on levels. Are you still looking at these levels and waiting for a breakout to the upside? Your perspective is completely wrong, and you are heading down the wrong technical path. Hi, I'm Tradiology, and in this video, I want to completely break down this mistaken perspective and show you the right approach. I'd appreciate it if you subscribe to my channel before watching this lesson. Alright, let's get into today's lesson. As you know, the price levels you see on the chart are areas where we expect a price reversal. These levels are formed because of collective psychology. To explain it simply, let's say we have a price ceiling in the past. If the price reaches that ceiling area in live markets, because the price once dropped from there, the general expectation is that it will drop again. The reason for this is that smart money identifies these levels and takes positions based on them. But if everyone sees these levels, why hasn't everyone become rich? They could simply open a sell position at these areas, repeat the process, and get rich easily. So why hasn't this happened over the years? Have you ever thought about that? Let me explain. Trading is a highly specialized field, and it's fundamentally built on probabilities. Everyone understands probabilities, but it's the execution of trades based on those probabilities that separates a professional trader from an amateur. This part isn't about teaching probabilities, but I needed to explain this so you can understand a professional trader's perspective on trading levels. Let's consider two traders. Trader X is a beginner who's new to trading and has just read about support and resistance. Then we have another trader, Y, who's a professional trader with several years of experience. Imagine we have a chart where the price is at a support level, and we ask both traders how they would trade in this area. Let's start with Trader X, the beginner. They say, okay, there's a support level, and the expectation is to buy, so I'll wait. Then, when they see a candle break below the level, they think, oh, the level has been broken, so I'll sell, and my stop loss is just above the level. Suddenly, the price reverses, and their stop loss gets hit. Let's not even talk about how upset they are after their stop gets hit, assuming they even had a stop in place. Then, the beginner thinks, why did I make a mistake? This level hasn't been broken yet, so I'll buy again. Once again, the price hits their stop loss. Then they think, this time, the breakout must have happened for sure, and the price has to drop. So, they enter the trade with an even larger position. What happens next? A strong upward rally. Would you agree that this moment is extremely psychologically stressful? I'm sure many of you have experienced this. Seeing this happen, the beginner trader completely enters an emotional decision-making loop. Overtrading and revenge trading ultimately lead to blowing up their account. Now, would you like to hear Trader Y's perspective? This person, a professional trader, has been familiar with probabilities for many years and knows how these price levels work. In their mind, they understand that there's a 70% probability the level won't break, so they're mostly looking for a buying opportunity at the level. They know that a breakout means we have to see several large, full-bodied bearish candles closing below the level to confirm a true breakout. So, seeing just one candle doesn't trigger any reaction for this trader. They haven't seen any buy signals yet, and they don't treat just one candle as confirmation of a breakout. So, they wait. The price moves up a little, but it's a weak move, and the price could still drop further, because the professional trader still hasn't seen the MTR setup either. So, there are two signs that keep them from buying yet. First, the weak bullish candles. Second, the incomplete MTR setup. So, they wait. The price moves down again. But now, I want you to tell me, would you consider this candle a breakout of our level that warrants opening a sell position? No. So, our trader feels obligated to keep waiting. After this move, they observe the price making a strong move upward. Now they have two choices: enter a buy trade right away based on this relatively strong move. Wait for the MTR setup confirmation and enter after a pullback. The beginner trader, with their impatience and lack of proper perspective, hit their stop loss 3 times in a row and ultimately missed out on the winning trade. But the professional trader, by waiting and leveraging years of experience, not only avoided wrong trades but also entered at the best possible spot. Don't get the wrong idea, professional traders also take losses. However, their losses are calculated, and they manage risk so well that losses don't significantly impact their account. Even in this example, the professional trader could have taken a loss when entering after the MTR setup. But because they did the right thing, even if they took a loss, it wouldn't matter to them, because in the long run, their account will always be profitable. I want you to focus intensely on observing these trading levels and see how breakouts actually happen. Most of the time, we see fake breakouts, and the price returns inside the level. A valid breakout happens when we see several strong candles breaking below the level. This filter is extremely powerful and can turn previously losing strategies into profitable ones with some experience and knowledge. Practice today's topic thoroughly, because I'm sure you'll see positive results. I hope you found today's content valuable and enjoyed it. If you did, I'd really appreciate it if you leave your comments, like the video, and definitely subscribe to my channel so you don't miss future lessons.